The news comes out that the United States economy is falling off a cliff, and then the stock market decides to rally. What's up, everybody? I am Jaspreet Singh and welcome to the Minority Mindset. The Commerce Department reported that the United States economy fell by 4.8% during the first quarter of 2020. That's the biggest drop we've seen since the 2008 crash. If that wasn't bad enough, they then said that this 4.8% drop is just, quote, the tip of the iceberg. Well, after hearing all this, let's call it not so good news, the stock market ended up rallying 600 points at the high. If you're scratching your head, make sure you cut your nails because there's a lot of confusion as to what's happening in the stock market and the economy right now. That's why in this video, I want to help you piece together what's happening in the economy and tie that into the stock market. That way you can make good decisions with your money. But before we get into that, hit that thumbs up button below because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. The stock market and the economy are similar but different. The stock market is the place where people go to invest and bet their money based on what they think is going to happen in the economy in the future. And the economy is whether or not you're getting a paycheck. The economy is hurting bad and it looks like it's going to get worse before it gets better. Yet the stock market is rallying. So if you're sitting there thinking, man, this doesn't make any sense, well, you're not alone. So let's break it down. This GDP number I talked about tells us how our economy is doing, and the fact that our GDP is declining will help tell us if we're entering a recession or not. Jaspreet, just look around you. Obviously we're in a recession. Well, technically speaking, a recession is when you see 2 consecutive quarters or 6 months of economic slowdown. Right now, we've only seen 3 months of economic slowdown, so we can't technically enter a recession until after June. But practically speaking, our economy is in a recession. Well, what's really interesting and kind of scary to think about is our GDP report that just came out was for the first quarter of 2020, and it showed that we had a pretty big economic loss. But if you think back to pre-lockdown times, it's kind of like prehistoric times, seems like forever now, but our lockdowns didn't start until mid-March of 2020, and our economy didn't start hurting until March of 2020. That means this 4.8% contraction that we saw was based off of only a few weeks of bad economy. Like, we had a very strong first 2 months, and then March was bad, and that bad March caused a 4.8% drop. That's why they're saying that this 4.8% decline is just the tip of the iceberg, because our second quarter, April, May, and June, is probably going to be a whole lot worse. So while we haven't entered a recession technically yet, it's pretty much guaranteed. So if we think that we're going to enter a recession in the economy, why is the stock market rallying? Well, remember what I said earlier. People invest in the stock market based on what they think is going to happen in the economy in the future. Plus, Wall Street has the Federal Reserve Bank supporting them, but I'll get to that in a little bit later. Investors have demonstrated that they are very hopeful that when the economy and the country opens back up, things will go back to normal. Plus, people are hoping that a vaccine or a cure or a treatment will come out to help prevent people from getting sick and dying. Just recently, a company called Gilead said that they're seeing some good results from a treatment that they created, but it could still take months, if not a year, before these things are in mass production. Regardless, this optimism has Wall Street very excited because they think that the economy will be able to recover very quickly. But I wouldn't say that we're out of the clear just yet. Actually, I think our economy has still yet to face some of the biggest hurdles yet. I want to talk about what's coming in our economy and the stock market, but before I get into that, if you are interested in investing in stocks, you have to use a stockbroker, and thanks to our sponsor Webull, that's very easy to do, and I got their link in the description below. Investing with Webull is simple. All you have to do is go online and create a free account with them, fund your account, and then you can buy or sell whatever stocks or companies you want. Plus, Webull is a commission-free brokerage, which means you don't have to pay a penny to make a trade. And if you're on the go, you can access their app and do research and make trades right off of their app on your phone. And the best part of all is that right now, Webull has a limited time promotion going on where they are giving Minority Mindset fans 2 free stocks just for investing with them. You get your first stock valued at up to $250 just for opening a free account, and you get a second free stock valued up to $1,400 when you invest $100 or more. So if you want to learn more and see how you can get your free stocks, I got the link that explains how you can do that and get started in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account, and it doesn't cost you a penny to make a trade. So if you want to learn more and get started investing, I got the link to where you can do that in the description below. Now, obviously, nobody can predict the future. Not the media, not the government, not even a random guy on YouTube. You can't predict the future, Jasperito. Right now, you have a lot of opinions on what's going to happen next, but I want to focus in on three. The healthcare workers, the people in power / economists, and the stock market people. The healthcare people, like Dr. Fauci, who is the White House's go-to doctor for this pandemic, has said that a second curve or a second wave of this virus is inevitable. According to him and lots of people in the medical field, this pandemic isn't going away in 2020. If that's the case and we don't have a working vaccine or a treatment, then our economy is going to have a very long and slow road to recovery because people are going to be scared to spend their money. Plus, lockdowns are expensive. Like, if we open our country back up in the summertime, and then things go good in the summertime and people are out and about, and then this virus starts to resurge in the fall and we have to restart these lockdowns all over again, now we could risk our economy entering a depression. But the economists, the Federal Reserve Bank, and the government don't think so. They see light at the end of the tunnel. The United States Treasury Secretary Steve Mnuchin says that he thinks the economy will start to recover in the summertime and we won't have any relapse or slowdown in the economy after that. So from the summertime onwards, it will go up. The Federal Reserve Bank had a press conference on April 29th, 2020, and they said that the first quarter was bad. The second quarter will be worse than anything we've seen before, but things should be better by the end of the year. And economists think that the United States economy will stabilize in the third quarter and that we will recover in the fourth quarter of 2020. And that leaves us with the stock market traders. The people on Wall Street, well, it really doesn't matter too much, but what we do know is that they're getting help with unlimited amounts of cash from the Federal Reserve. That's one of the reasons why you can have horrible economic data come out and at the same time the stock market rally. For the first time in history, this didn't even happen during the 2008 crash, the Federal Reserve Bank invoked special powers which allowed them to print an unlimited amount of money, not just to lend money directly to banks, but now to use their money to buy up investments like treasury bonds, mortgage-backed securities, corporate bonds, and junk bonds. This gave a lot of reassurance to Wall Street because you had all these wealthy institutions holding onto hundreds of billions of dollars of bad investments, and now they're able to get these investments off their books by selling these bad investments to the Federal Reserve Bank for top dollar. So this unlimited supply of money obviously skews the market a little bit, but a lot of investors and traders are very optimistic that the economy will open up and things will get better this year, and so they're buying because of what they think will happen in the economy. So what's actually going to happen? Well, nobody can predict the future, but what we've seen happen so far in 2020 is that people have been wrong. A lot. Back in February, we were told that America will be fine, nothing is wrong, and nobody has to worry about getting sick. In March, we saw the fastest stock market decline in history, and then we were told that we need to have some short stay-at-home orders to prevent the spread, but don't worry, they'll be small and we'll be back to normal in no time. By April, we saw the fastest growth in unemployment in history, and then lockdowns were extended, and then businesses were forced into bankruptcy. It looks like investors are very optimistic as to how the economy is going to play out for the rest of the year, and so they're pricing that into the stock market. The risk is that people could be wrong again as to how long these economic effects are gonna last. Even the Federal Reserve Bank started hinting at that in their press conference, which is not good news because the Fed's job is to keep people very optimistic about the economy and think that nothing's wrong. But they hinted in their press conference that while they hope that the economy will start to recover by the end of the year, they really don't know anymore. The Federal Reserve Chairman then said that he initially thought that this would be a short-term issue and now at the very least it will be a short-term and a medium-term issue. I don't know what medium-term means, but if I had to guess, I would guess it's something a little bit spicier than Taco Bell's mild sauce. The biggest issues we're running into right now are businesses running out of money, the financial industry potentially collapsing, consumer demand shrinking, and the wild card of printing unlimited money. Let's start with the first and the most obvious. Businesses running out of money. Pretty much every industry is suffering because of this pandemic. Airlines have already been given huge bailout checks. Cruise lines are suffering. The oil and energy industry is seeing their worst crisis in history, with oil prices even going below zero for some time. Real estate is hurting in both the commercial and residential markets. Startups are having a tough time raising more money, like Lyft just laid off 17% of their workforce and cut their salaries for everybody else. And most recently, we just found out that Hertz is running out of money and they don't even have enough money to pay their rent, so now they're looking at bankruptcy. These business slowdowns are gonna take time to fix, and they don't just happen in a bubble, they have a ripple effect. Like if Hertz goes under, that means that less cars will be being bought, which means that the car industry and the car manufacturers are gonna get hurt, and that also means that people will lose their jobs, and that means people won't have money to make their mortgage payments, which would also hurt the banks. Second is the financial industry. Lots of people and businesses have loans that they no longer have money to pay for. Well, that's kind of the nice way to say it, because prior to this crisis starting, we had sort of a debt crisis brewing because consumers had a record high amount of consumer debt and businesses had a record high amount of corporate debt, and now people and businesses don't have the money to make their loan payments. That's not good news for banks. The Fed has said openly that they will do whatever they can to help keep the banks alive and running without any problems, but we don't know how bad this problem is gonna get. If you think back to the Great Recession of 2008, banks really started to have issues in 2005. And then it took some time for those issues to develop before things started crashing. Right now, people and businesses are in a bigger hole than they were in before this whole crisis started, so it's going to be really interesting to see how this all plays out and what assistance programs are created by the government and the Fed to help people out, if any. Third, you have shrinking consumer demand. The demand to buy a home has fallen faster than ever, and the demand to buy a car has fallen faster than ever. Now, a big part of that is because people are forced to stay home and they're scared of getting sick. But the second problem that's becoming bigger and bigger is people don't have the money to buy these things. We have tens of millions of Americans without a job right now, and a White House economist has said that we could see 20% unemployment in June. And this brings me to issue number 4, the wild card. Unlimited money printing. We have already printed a historic amount of cash to fund these stimulus checks and bailouts and the Federal Reserve buying all these crappy investments. But there are 2 issues with that. You can throw as much money as you want into the economy, but until the health issues get fixed, you're just throwing money into a black hole and leaving taxpayers with the bill. Second, the wild card is how the government and the Fed will stimulate the economy and businesses in the future, because now there's a lot of pressure being put on the government to stimulate people on Main Street instead of just Wall Street. We've already seen banks and big corporations get an unprecedented amount of liquidity to help them stay in business, which has boosted the stock market. And now people are saying, hey, give us some of this free money too. So now there are talks of a second stimulus program happening. And by the way, this free money isn't actually free. It's actually really expensive. It's still up in the air, but now there are talks of sending everybody who makes under $130,000 a year $2,000 a month until this whole crisis is figured out. What you want to do now is look for ways to capitalize on opportunities that come your way, because every crisis comes with opportunities. Nobody can predict the future, and investing has risks, but you want to look for investments that are getting hurt that you can buy on sale. That's why you want to stay on top of what's happening in the finance and business world. And if you're thinking, Jaspreet, if only there was an easy way to do that. Well, there is. That's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money, and then our team will email you this newsletter at 7:30 a.m. Eastern Standard Time every morning, Monday through Friday. You can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are different from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about the real cost of printing all this free money, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.